Thank you again for tuning in to the No Tax Banking channel. Today we're going to be talking about life insurance companies and how to pick the best one for you. So, thank you so much for joining me today. And today I'm going to be talking about insurance companies. What is the best insurance company for you? Now, I'm going to talk about a little bit about insurance companies overall, but I am also going to put in there, hey, what are the best companies for those practicing no tax banking? So, first, when we start talking about insurance companies, there are two main differences between insurance companies. One, that they are corporately owned insurance companies as well as mutually owned insurance companies. What is the difference? The biggest difference is the corporately owned and the privately owned insurance companies, they have shareholders, right? They have shareholders that are usually people that own stock in these companies. They're usually publicly traded. And just like any business that's publicly traded, their priority is the shareholder and making a profit, right? Making a profit for that shareholder. Okay. Now you ask yourself, what's the difference between a mutually owned insurance company? A mutually owned insurance company, they as well want to make a profit, right? Because any business that anyone starts wants to make a profit. But the biggest difference is the shareholder are the policy owners. So the policy owner is the shareholder. And so when you buy a policy from a mutually owned insurance company, you automatically become like a shareholder, like a part owner of that company. Why is that important? That means that when that company makes a profit, what you're going to do is you're going to partake in that profit in the form of dividends. Right? So because you're a part owner on a corporate side, if those companies make a profit, and if they have a dividend type of structure, then they can earn a dividend. But what is the biggest difference between those dividends? I'll tell you. It's because the dividends over here are taxed. The dividends from the mutual company are not taxed. And your next question inevitably is going to be, why isn't it not taxed? Is a dividend, is a dividend, is a dividend. This is why. Because since you only receive that dividend because you are a policy owner. So that means that you have an active policy with that insurance company. So what's going to happen is you're going to receive a dividend, but they're going to call it a premium repayment. So it's basically they're going to call it a premium repayment. Basically, they're giving you back some of the money that you paid them. So if you go to the store and somebody gives you a refund, you don't pay taxes on what they gave you a refund for. It's the same concept. However, what's different over here? You're not paying tax on that. If you're on this side, you pay tax on that. So when I'm working with clients and they're asking me these questions like, what are the companies and what should I pick? I'm like, we only work with mutual companies. And what we like is we like companies that's been around for 100 years. Also, we like companies that have been paying dividends for 100 years. Why is that important? Because I know that this company has been around for a long time, as well as they have a track record of being profitable. If the only time they get paid dividends is when they're profitable, if you have a 100-year track record of paying dividends, that means you have a 100-year track record of being profitable. That's what I would want to do. It's easy. I don't have to go over to the stock market. I don't have to pay for stocks, bonds, mutual funds, and have the possibility of my money losing value. I'll just buy a policy. And when we're dealing with no tax banking and we're buying whole life dividend producing high cash value life insurance policies, the money I put in my policy, the money is guaranteed never to lose value, right? I put my money somewhere that's never to lose value. I'm putting it with a company, even though the dividends are not guaranteed. The company I'm with has a 100-year track record. So the likelihood of profitability is higher. And then when I'm using that whole life high cash value dividend producing policy, then that policy is producing a guaranteed interest rate. So that's locked in, right? And then the next thing that we have over here on the mutual side that is very unique. And like I said, again, with using a no tax banking strategy, something else, you want to have access to your cash value And just to remind you of what the no tax banking is, it is a system in which you take control of your finances, right? By adding one extra step to it. Instead of your money going into a conventional bank in a conventional situation, you put it inside of your own private bank, which comes in the form of a high cash value, dividend producing whole life policy. You put your money in there and you can use that cash value. You can take it in and out however you seem fit. And usually you have access within 30 days of your premium clearing. And you can go do exactly what you've been doing. You're paying for your car, you're paying for your house, your everyday bills. The problem with, life insurance is that people only think about it in terms of someone dying. But life insurance is for life. You're going to have 4 more reasons to use your money while you're living than after you're dead. So why not put that money in a place where you have control over it? You're going to buy from a company that when they make a profit, they're going to give you a dividend that's not taxed. When you buy the right product, you're going to have a locked in guaranteed interest rate. You're going to have access to your cash value within 30 days, and they have a 100-year track record of actually paying those dividends. And it's all under your control. And it's not taxed. That's why we call it no tax banking, because you get all of that and it's not taxed. Now, there's some great publicly owned corporate companies out there, and it's great, if you want to buy, the way for you to buy into that is actually, buy the stock and things like that. And a lot of them make great profit. And some of them have great products, but you're not a part owner when you buy a policy with them. You're not a part owner. You don't get the dividends from them. The only way you can get a dividend from them is buy shares from them. I'd rather go with a company. What about you? Wouldn't you rather put your money somewhere that's guaranteed to never lose value, guaranteed to grow at a certain rate? When the company that you're putting your money, where you have your policy, makes a profit, you make a profit, it's a win-win. Nowadays, everything we do is all about partnership. When we're buying brands and buying from companies, we should be thinking to ourselves, how is this purchase going to help me, help my family, help my community? With buying from mutual companies, you know that immediately. Thank you so much for joining me today. I cannot wait to teach you some more. If you have any questions, please put them in the comments below. We look forward to for tuning in today. For more information, please go to our website, notaxbanking.com. We can't wait to help you.